micro-consolidators, you mentioned, like big NHS or bigger NHS contracts.
The more practices that we're selling are to people that own multiple practices or maybe buying their second practice.
Mixed practices, there probably is a bit more interest at the larger end of the scale.
So growth is the key word, I guess, within the market.
Overall, the general market is really liking bigger private at the moment. Welcome to our first water cooler of 2025. Traditionally, we always record a water cooler on the first day back, largely because people often use the festive period to make big decisions about what they want to do in the forthcoming year. And we also notice this in terms of our website. There's a big hit coming into these first couple of weeks, with regard to people looking to both buy a dental practice, and indeed traditionally we sell a lot of smaller stock in this first quarter normally, and also people then looking to make decisions to exit over the forthcoming year. So we're going to use today's water cooler to talk about what 2024 held for dental practice owners in terms of valuation and market, and what we think 2025 might hold. So where do you want to start, Phil?
I guess let's start on NHS practices, because a lot of practices out there have an NHS contract, and the misconception, I guess, has been that NHS practices multiples have softened and people don't want NHS, and I do think that is a slight misconception moving towards the back end of last year from what we're seeing as valuers.
Yeah, no, I'd agree, because I think indisputably, I think the bigger NHS stuff, which people are struggling to hit their NHS targets, and that's probably the key thing, struggling to hit NHS targets in certain locations, they're not as valuable or indeed as popular as they were. So I'm talking about your NHS practice in Perranporth or your NHS practice in Kings Lynn. Those big practices, they're not doing as well as they did maybe 3 or 4 years ago.
But that's every practice within them areas. So areas which are really hard to recruit, we're still seeing softening of multiples and lack of interest. With the exception of maybe big private within them areas. So if you've got a big private practice, turning over 1.5 million in, let's say, Lincolnshire, different areas which are hard to recruit, you can achieve some good multiples, and there are buyers out there. But yes, NHS, them rural hotspots, they're not delivering the contracts, and the risk is that somebody buys at, let's say, 6 times, but realistically they can only deliver 5 times because of recruitment challenges.
Yeah.
But good areas, so let's say big NHS in London, Birmingham, Manchester, what we are seeing is a resurgence of both micro-consolidators and equally corporate groups that are looking at that as good EBITDA, solid EBITDA, which translates into higher EBITDA multiples than probably a year or 18 months ago.
Yeah, and ultimately I think it's all about, as well, expansion for growth, I think, at that upper end of the market. It's people, indeed, micro-consolidators, you mentioned, like big NHS or bigger NHS contracts, where they can use it as a platform to offer private dentistry and create a more mixed practice. So certainly I wouldn't say NHS is dead, but then as we were saying at the other end of the market, kind of the smaller, sort of anywhere from 4,000 to 14,000 UDAs typically, those practices are still really, really popular, almost to a certain extent, regardless of location. I mean, there are multiple variations depending on geography, don't get me wrong, but I would still say that's probably still the jewel in the crown when we launch practice to market.
100%, and I guess the positives to take away, if you are a smaller to mid-size NHS / mixed practice, more weighted towards NHS with growth potential, is what we did start to see at the tail end of 2024 is actually practices going back to bidding deadlines, and multiple offers. We probably didn't see that towards the back end of 2023 and the first half of 2024, is practices just weren't achieving them competitive prices through bidding. That's now changed now, and that may be down to probably interest rates going down and a resurgence of buyers who have come out of hibernation and there being more competition. But certainly them practices now seemingly good stock, room to grow. NHS contract 5,000 to 12,000 UDAs typically, but that massive scope to grow seemingly are back up to where they were pre-COVID.
Yeah, and I guess also we'll come on to mixed and private practice in a second, but I think overall, I guess in 2024 versus 2023, they couldn't, I don't think, be more worlds apart in the fact that I think when we went to 2023, there was still lots of apprehension about interest rates. There was lots of apprehension around recruitment crisis, which I do think has softened slightly over the last year. And it's fair to say that I think everyone kind of sat on their hands to work out what they were going to do. Whereas 2024, as you mentioned, with respect to bidding deadlines, more particularly in the independent market, is we saw a lot of people come back to market who had sat on their hands, or indeed from the micro-consolidator side of things, had paid down a lot of debt and are now at a point where often they're not buying with quite the same quantum of debt, should I say, as what they were buying previously. They're buying, some would argue, more conservatively, but they used the period during COVID and for the period, the couple of years after that, to pay down a lot of debt, so they're in a much stronger acquisitive position.
Well, the thing is that what we're seeing is the more practices that we're selling are to people that own multiple practices or maybe buying their second practice, and that's because they've capitalised on the growth in the market in private, and maybe they've bought a practice and expanded that practice, paid off a lot of debt, and now they're in a perfect position to buy their second, third, fourth or fifth practice, which is a trend that we probably see continuing well into 2025.
Yeah. Absolutely. So if we just sort of briefly then touch on sort of mixed practice. So I would say mixed practice, probably similar commentary, I would say, to NHS practice, save for maybe not quite the same view on larger practices that are NHS. I would say mixed practices, there probably is a bit more interest at the larger end of the scale, but again, it depends on geography. And of course, what we determine as a mixed practice is anything which is from, say, 80% private to 80% NHS in between those barriers. And I think if you're more NHS, then you're probably less popular. If you're more private, you're probably more popular. Is that fair?
Yeah, I guess it comes down to the type of buyer. If you're one of the big corporates, you're probably leaning more towards the private end of a practice being more private than more NHS. But if you're an independent or a partnership or somebody looking for a higher grossing practice, you probably still want the security of the NHS. But I guess the key word is in the market at the moment is growth. So anybody looking to buy needs to be able to grow that business. Whether you're an independent and taking out a bank loan at 80 or 90%, you're going to need that growth because you're paying 8.2% interest still with base rate where it is. Or if you're a corporate group or a micro consolidator, you need to be able to grow to dilute the multiple to make sure you have an arbitrage after 5 years when you come to exit. So growth is the key word, I guess, within the market as I see it.
Yeah, absolutely. And then just to conclude on private practices. Now, I think private practices are almost the inverse of NHS. I think the bigger end of the market is actually lots of interest, really kind of, really acquisitive in terms of that end of the spectrum. Maybe a little bit more apprehension about high performing associates, because I think, what we've seen over the last few years is certainly a lot of the bigger dental groups, learn a lot of lessons, should we say, on some failed acquisitions, and thus they are more aware of some of the risks attached to buying certain businesses and more specialist practices and high performing associates. But I think overall, the general market is really liking bigger private at the moment. But then I think conversely, if you go to really small private, unlike the NHS market, sometimes that really struggles, doesn't it?
I guess and it all comes down to area, and if it's in a great area where there's loads of scope to grow, yes, there will be interest. But it all comes down to, as an associate, they're probably taking a hit on their earnings if they buy a practice. And that could be a considerable hit when you take into account the interest rates and the time they need to spend to develop them practices. If you've got a practice delivering a turnover of 200 or 300 grand and you're looking to fund that practice, you're probably going to only be earning 60 to 80 grand a year on the back of that practice. So it is a big opportunity to grow, but also it comes with some short-term / medium-term risk.
Yeah, and I just want to touch on that end on squat practice, because I guess that's what we get approached, particularly that end of the market, as should I own a squat practice or should I buy an existing practice? And I guess to touch on existing practices for a second, I think the biggest apprehension is the fact that if I buy this practice for a couple hundred grand, what I'm actually buying. If I'm buying a practice which has just been underinvested, then in all practicality, I might have to spend another 100 grand to get that practice where it is, because as we've sort of gone through the cost of living crisis now, a lot of people are now coming out of their fixed rates mortgages. So actually, the pounds in people's pocket is now less than it was sort of 18 months to 2 years ago. And the reality is, when they look at private dentistry, people want to see value in terms of what they're paying for. So they want the environment, or they want to see, what they're actually paying for in that practice, and that it holds, a product differential to an NHS practice, for example. So what we have seen is we've seen a lot of people go, well, rather than buy goodwill like that, what I'll do is I'll squat a practice. And we've seen some great success stories. In fact, we've sold some very successful squats. But in equal, from the other hand, what we did get a lot of last year is people who've called who said, I opened a squat practice anywhere in the last sort of 3 years, and I spent all this money, sometimes for £500,000, 600 grand, and they're struggling to gross 200, 250 grand. And often it's that kind of horror show phone call, isn't it? Saying, look, you're just not going to get back what you put in.
Well, nowhere near, because what you've got to look at is that's probably delivering a negative EBITDA. And simply from a cash flow, you're expecting somebody to pay 200 grand to recoup some of the loss. But equally, they may then be in a negative cash flow of 5k a month just to support the running of the business. So there is some nightmare stories. There is also some fantastic positive stories of where somebody's invested 200 grand and they're going to get a big arbitrage when they come to sell. But certainly when determining whether to buy a squat or to set up a squat, really you've got to think about how you've envisaged that business to operate, what's your target market, and whether indeed it is an opportunity or whether buying goodwill actually is probably the right way to go.
Well, so I hope that gave you an overview to start with for the year. Obviously, we'll be producing a lot more water coolers and webinars as the year progresses. But in the absence of that, Happy New Year.